Hi, good afternoon. Welcome to the marketplace. Coming up, Cedi sustained appreciation drives down inflation for June 2025 to 13.7%, recorded in May, and we'll hear from the government statistician.
On-year rate of inflation for June 2025 was therefore 13.7%, a 4.7 percentage point drop from the May 2025 inflation of 18.4%.
Some analysis also coming up. Cedi records first monthly depreciation against dollar for this year, despite the Bank of Ghana injecting more than $4 billion to support the local currency from January to July. Plus, Ghana Revenue Authority sets July 16 as new date for implementation of one Cedi levy on fuel, a move that could result in petroleum prices going up in the coming weeks. My name is Quagi. We'll discuss how all of that will impact inflation. Don't go anywhere. Thanks for staying with us. We begin with the latest inflation figures. Inflation for June 2025 dropped by 4.7 percentage points from 18.4% to 13.7%. This represents the sixth consecutive drop year-on-year. The rate also marks the lowest since December 2021. Addressing the media at the June Consumer Price Index presser, government statistician Dr. Alhassan Idrisu attributed the drop to sustained monetary and fiscal policy gains.
The CPI for June 2025 was 257.3, down from 260.5 in May 2025, and up from 226.4 in June 2024. Year-on-year rate of inflation for June 2025 was therefore 13.7%, a 4.7 percentage point drop from the May 2025 inflation of 18.4%. This means that on the average, the prices of goods and services increased by 13.7% between June 2024 and June 2025. On month-on-month basis, there was a deflation of 1.2% for June 2025, implying that the general price level fell by 1.2% between May and June 2025. This means that Ghanaians paid less for goods and services in June than they did in May 2025. The June inflation we have just reported is the sixth consecutive year-on-year drop we've seen in inflation, and is the lowest inflation in terms of year-on-year since December 2021.
All right, that was a government statistician. Lead data analyst John News, Isaac Ofeji, joins me in the studio to discuss this real significant drop. 4.7% sounds incredible, but that is what the government statistician is reporting. Break down the figures for us.
Well, so Dar, if you can see, this is the national value, which is around 13.7%. But if you break this down, you see that there are more than 10 regions with inflation above the national average, so 11 in total. So you could see that regions like the Bono, Volta, Oti, Ashanti, Western, Northern regions, and even the Upper West region having inflation as high as 32.3%. So although the national average is around 13.7%, you still have regions recording higher inflation rates. And all of these regions, all of these 11 regions are supposed to be the food basket of the country. So it simply means that structural issues still exist. And in fact, if you see the Greater Accra, it's falling below the national average, 12.2%. It's because it was one of the regions that really benefited from the that campaign to drive down prices, malls and promotions going on in the Greater Accra region, and then also transport fares. What you see is that Greater Accra region was one of the regions that really benefited from that transport fares that was cut in the first quarter of the year. And so for me, I think if you look at the other breakdown, looking at the transport sector, which recorded a deflation of some 8.1%. When anything happens in the transport sector, it has that multiplier effect, and that is the reason why we are seeing that 13.3, 13.7% inflation. So 8.5% deflation in the transport sector. I mean, hitherto you would have seen an upward. It will be amongst the top 5 or the top 3. But currently, we are recording deflation at the transport aspect, and this would definitely affect other aspects of the,
trending.
Yeah, exactly. I mean, if you look at even education, health, and others are all recording high inflation. Just look at non-food inflation rate, for instance, somewhere around 11.4%. But food inflation is still above the national average, in excess of 16%. That tells you that food is still very expensive, although we've seen the cedi gaining more than 20% against the dollar since the beginning of the year. We've seen fuel prices going down. Now, the big question is, government is on the verge of implementing that 1 cedi additional levy on the export price of fuel. What will be the impact? Are we going to see the transport component of inflation reverting, coming into the inflation aspect? And what will it be? What would be the key impact on the main headline figure that we are seeing today? But, I mean, the most important thing is that if you look at it on the national scale, this is the first time in a long time that we are recording somewhere around 13.7%.
I think there's a breakdown when it comes to food inflation.
Now, I mean, Darryl, if you look at this, just look at oils and fats, 9% inflation. All the others are recording deflation. And so you shouldn't be surprised if you see inflation coming down to 13.7%. It's simply because you see majority of what usually will drive inflation upwards or in the deflation zone. Water, for instance, is on the deflation trajectory. Soft drinks went down by some 1.5%. There's also milk and other dairy products also down. There's also cocoa drinks also down. Fruits and nuts, all of these things are down. And it explains why we are recording that low 13.7%. And so definitely, I mean, if you look at it on the national scale, where although we have that national average of 13.7, there are 11 regions still recording inflation rates above the national average. And if you look at a place like Upper West and Upper East regions,
I think the figure was 32.
32. And
5, I may be wrong, but it was in the 30s.
And in fact, these are supposed to be the food basket of the country. That's where we are supposed to produce and bring it to the capital. But one thing we know is that when you see producer price index coming down, it definitely will affect inflation. So I wasn't surprised because I saw May producer price index and it was significantly very, very low to what we used to see last year and last 2 years. So I was expecting this significant drop, but not more than 4 percentage points. It's really, really key. And the key question is the Bank of Ghana going to follow suit and possibly do a rate cut? Some of the questions that investors, economic agents are asking currently.
You mentioned the 1 cedi fuel levy, which of course is going to be a subject for discussion on Beyond the Numbers.
Absolutely.
That's in just under an hour. Tell us what you'll be talking about.
Well, the president actually announced and has launched the 24-hour economy and accelerated export, development program. We are asking a very simple question. The 24-hour economy will actually run on the good wheels of a good energy sector. So the question is our troubled energy sector that we pay in excess of $1 billion, to buy fuel. This year, we are estimating that we could pay excess capacity or shortfalls close to about $2 billion. Do we have a strong energy sector to actually support the 24-hour economy. So we've got all the data, and we've got all the president said. He said the 24-hour economy is going to run on 8 pillars, but definitely without energy, all of these 8 pillars would not run to where the government wants the 24-hour economy to go.
That's at the top of the hour, at 2 p.m.
2 p.m. Yeah,
so beyond the numbers with Isaac Ofeji, Winston Taki, and Caleb Ziblim. Thank you so much for the update. We want to speak right now with Nelson Quagi, who is head of finance at Melbourne Capital. Good afternoon to you. With more reaction to the inflation figures that we have seen. First off, how significant is the drop in inflation to 13.7% for Ghana's economic outlook?
Very much, Darrell, and good afternoon for having me. Let me say that just as your reporter rightly said, the reduction from 18, the last month inflation to 13.7% this month is really significant. In fact, some of us were not really expecting this sharp reduction. However, the reduction could largely be attributed to government-owned fiscal consolidation measures and the tight and strict monetary policy stance that the Bank of Ghana has taken. To investors, I believe this one will serve as an incentive to them. Government policies and programs are yielding the desired result. And again, also, hope and confidence is bouncing back to the Ghanaian economy. The fundamental factor that is actually driving the inflationary, the disinflationary pressure has to do with the stability of the Ghanaian cedi. The relative stability of the Ghanaian cedi can be felt at the pump, that can be felt in all the market across the country. The only thing that is worrying is that when you are having a national inflation of 13.7%, the regional inflationary pressures are still high. Look at Upper West region of over 30%, and look at Bono region. And so I think there is a mismatch. And so policies and programs that government wants to implement regarding the agricultural sector in general must be region specific. For instance, when you go to Upper West region, most of the road network, they are very bad. When you go to Bono region and you go to most of the Bono region, the road network, very bad. And so maybe cutting of the food product from where they are produced to market centers, even in those regions, is problematic. So I think that government needs to be specific and region-tailored program in order to curtail, and reduce significantly some of these regional worrying inflationary figures.
Yeah, and Isaac made a point about that figure, the fact that, we are seeing this mismatch, pointing to the fact that there are still some structural issues. But generally, food and essential items were cited as key drivers for the slowdown. There's been good harvest, prices are generally low. How sustainable is this?
Well, I think from the trend that we have witnessed from January to date, I think that the disinflationary pressure will continue to the end of the year. End of year target is 11.9%, inflationary figure that the government wants to achieve. Currently, we are having 13.7%. Now, food inflation itself is actually coming down. Non-food inflation is coming down. Imports of goods are also coming down. And so all this will culminate into driving, the sustainability of the inflationary pressures.
You mentioned the cedi as well, the fact that that has also contributed to transport fares going down. We've seen a cut in fuel prices as well. And so, like you pointed out, we are seeing the effect of the cedi's appreciation on inflation. Is that the case?
Yes, that is rightly the case. And so you realize that any slight depreciation of the cedi will translate into an inflationary pressure. In fact, in the month of July, I think the government will be paying its debt obligation in terms of interest. The question is, could that endanger the inflationary pressures? Again, the 1 Ghana fuel levy that will be rolled out this month, that may also contribute in one way or the other towards the depreciation of the cedi. However, looking at where we were 14.70 at December 2024 to about 10.3 Ghana cedis currently, I expect the stability of the cedi to continue, despite the fact that government will be making some huge payments. I expect the inflationary pressure to reduce, to remain stable from now getting to the end of September.
So we don't expect a significant impact when the 1 cedi fuel levy kicks in on July 16.
Well, we expect an impact, but we don't expect a significant impact. The reason being that technically or automatically prices at the pumps will increase. And when prices at the pumps increase, we expect transport operators to, as it were, negotiate for a slight adjustment in their prices. And so we expect that to translate into a little inflationary pressure, but I don't think it will be significant enough to derail the inflationary gains that we have made so far.
I want to backtrack, talk about the cedi, because we raised an important point in our headline that has to do with the cedi depreciating, recording its first monthly depreciation that's in the month of June, despite the Bank of Ghana injecting some $4 billion to support the local currency from January to July. Is this one of those things? Do you see this as a threat?
Well, I think the slight depreciation of the cedi has to do with the demand on the cedi has to do with the demand on the dollar. But I think going forward, government just raked in about $370 million. We have built enough buffer since the beginning of the year. Just 2 or 3 days ago, the CEO of the Ghana Gold Board also made mention of the fact that for the month of June alone, about $900 million was raked in. So I think with all these dollars that are coming in, we must not experience any significant depreciation of the cedi because we have built enough buffer to actually meet the demands of those who actually need the dollars. So I don't expect any depreciation of the cedi. In fact, the cedi has stabilized within a band of 10 Ghana cedis for almost a month and a half now. And so I expect that to continue, even ending July, August, thereabout. Even if government begins paying out its debt obligation and other commitment for mid-year, I don't expect the cedi to actually, depreciate that much.
So 13.7% looks good. What should be the warning signs for the government? What should they be on the lookout for?
Well, the government actually made mention of 11.9% in the budget. Mid-year, we are at 13.7%. So you realize that the percentage difference is just about 2% thereabout. And as it stands now, if all the fiscal consolidation measures and the strict monetary stand taken by the Bank of Ghana still continues, what we expect is that inflation as at the end of the year should be tilting towards a single digit. And that will be very good and very significant for the economy.
All right, Nelson Quagi, thank you so much for your insight and perspective to these latest inflation figures from the Ghana Statistical Service. Appreciate it. Thank you so much for your time. You're watching The Marketplace. We're going to take a short break. When we come back, we're going to talk about the 24-hour economy policy and how that could impact the tech sector. And let's talk tech. Don't go anywhere. All right, welcome to Let's Talk Tech. Aside from inflation, our eyes are on the launch of the 24-hour economy policy by the president today. The president revealed a series of program initiatives aimed at transforming Ghana's economic structure, and he talked essentially about some of the other things that they were going to do, such as Go 24, Build 24, Fund 24, Go 24, and other strategic interventions designed to boost agriculture, infrastructure development, financial access, and efficient logistics. Well, how about tech? How is tech going to benefit from this 24-hour policy? Quick thoughts from lead for Eyes of Africa, Henry Kobler. Good afternoon to you, Henry. What do you think?
Good afternoon, Daryl. So, thank you very much. If you're looking at the policy point for the government, where they are looking at the 24-hour economy, I mean, to me, it had really looked like it was a more disguised strategy to use technology to get more improvement in terms of infrastructure, in terms of agriculture and all of that. And so it really meant that technology was going to play a very major role in what was going to be deployed. I mean, you generally would have technology being the base point for all of these deployments that you're looking at getting into. And for me, it's very good because, again, it really increases the sort of demand for digital services. I mean, across board, if you're looking at any of these services which is going to be deployed, say passport services, where if you're having printing of passport, it's more like digitalizations in that part. And so, again, for me, I think that it raises the point of digitalizations all across board, the demand for digital services. Again, it also comes in where you are boosting IT infrastructure development as well and creating new jobs in the tech support and operation services, which would be coming. I mean, you have night people getting into giving tech support, network monitoring, software engineering, customer services, and all of that, which is great for me. Again, it's also going to look into fintech and how it's going to improve on fintech. It didn't really come as a surprise that the government had looked into putting in the 50 million funding away for fintech companies, because again, it envisions that almost everything that it's looking at in terms of the 24-hour economy is really going to cash in or get through with it from the fintech point, or is going to check out from the fintech point. And so it's very important that you have some level of stabilization in the fintech and digital payment systems as well. And again, some level of automations and AI adoptions coming in to make things easier. And so you wouldn't really be having people on the farms farming at 12 o'clock in the midnight, but you could have some level of automations coming through with it.
Yeah, Henry, 30 seconds. I want you to react to another story that is of interest to us. Gives you HSA stepping down after nearly 2 decades of service. What has been his contribution to the tech world?
Amazing. I mean, he's really worked a lot more. He's pioneered the Ghana cashless agenda. I mean, he's done very well when it comes down to the mobile money interoperability. Again, he's also looked into that level where you're having real-time payment systems in terms of gifts and his role that he's sort of played there. The QR code was also one of the things which he was able to achieve, which I really like. And then, again, financial inclusion advocate for us. He's been at the forefront, and I think that he's done a very good job.
Thank you so much. We'll talk about this some more, I'm sure, next week. Thank you so much, Henry Kobler, lead for Eyes of Africa. Thank you so much for joining us for the marketplace as well. More news on our website at johnonline.com/business. My name is Daryl Crow. Thanks for watching.